All right, let's get right into it. A massive headline just dropped, and it's got everything. A huge tech company, a global superpower, and a high-stakes geopolitical chess match. Yep, we are talking about Nvidia, and a move from China that really sent some ripples through the market. So here's the news that hit the wires. China's market regulators came out and said a preliminary investigation found Nvidia violated the country's anti-monopoly law. The market, well, it reacted instantly. The stock dropped about 2% in pre-market trading, which is a really clear signal of just how seriously investors take these kinds of moves. But here's where things start to get a little weird. The violation they're talking about, it's linked to a deal that was all wrapped up back in 2020. So you gotta ask, why now? What is really going on behind this headline? And that's exactly what we're going to unpack. To figure out the real game being played, we first have to get our heads around the official story. You know, the one the regulators are putting out there. So here's the deal. Back in 2020, Nvidia bought a networking tech company called Mellanox. Chinese regulators gave it the green light, but they attached some strings, some conditions. Now, all these years later, they're suddenly claiming Nvidia didn't hold up its end of the bargain. On the surface, it just looks like a pretty straightforward regulatory issue. But, like with so many things in geopolitics, the surface story is almost never the whole story. To really get what's happening here, we need to look at what's going on around this announcement, not just the announcement itself. And this, right here, is the key. Analysts who are digging into this are all basically saying the same thing. The anti-monopoly claim isn't the point, it's the weapon. It's a way for Beijing to get some serious leverage in a much, much bigger negotiation. Or to put it another way, this is a totally calculated move. It's political theater, right? And it's designed to send a very specific message at a very specific time to get an edge. So, with that in mind, let's take a look at the timing. This timeline really lays it all out, cause and effect plain as day. So December of last year, the US tightens the screws on chip exports to China. Just 1 week later, 1 week, China suddenly opens this probe into a deal from 2020. Then you fast forward to today, and US and Chinese officials are literally in Madrid for trade talks. And boom, the violation is announced. The timing isn't just a coincidence. The timing is the entire point. You have to understand, this move against Nvidia isn't happening in a vacuum. It's just one piece of a much larger coordinated strategy that's coming out of Beijing. And believe me, Beijing has a lot of other tools in its arsenal. At the same time this is happening, China has launched new anti-dumping investigations into other US chip makers. They're also holding back the final approval for Nvidia to sell its H20 AI chips in the country. And it's not just tech. They've slammed the brakes on buying US soybeans, which is a major economic pressure point. The Nvidia probe is just one more weapon they're bringing to the fight. And all of these moves, every single one, they're all aimed at a single goal, putting pressure on Washington during these trade talks. They want to put their thumb on the scales and ultimately try and force a reduction in US tariffs. It's a full court press to get a better deal. Now, as you can imagine, this kind of geopolitical chess game creates a ton of uncertainty. And that uncertainty is creating a really strange, almost contradictory story in the wider market. So, while all that's going on, look at this number, $700. That's the price target a big-name analyst just put on Tesla. So while the entire semiconductor industry is bracing for impact from this trade war, other parts of the market are telling a totally different and way more bullish story. So how does this even work? Well, on one hand, you have the technicals for Tesla pointing to this really bullish long-term pattern, suggesting the stock could hit $700 in the next couple of years. But on the other hand, the very same analyst is looking at the broader market, the S&P 500, and is basically flashing a caution sign. They're saying the market's in a mature place, it's facing some seasonally bearish trends, and showing some weakness under the surface. It's a perfect example of a market that's being pulled in two different directions, where you can have huge geopolitical risks right next to pockets of incredible optimism. So, what's the big takeaway from all this? First, the headline is almost never the whole story. You've always got to look for the real motive. Second, geopolitics and the markets are just deeply, deeply connected. Third, a single event like this Nvidia probe, it's often just one move in a much bigger strategic game. And finally, the fallout from these games doesn't hit the whole market evenly. It can create these conflicting signals, where one sector is hurting and another is just thriving. All of this leaves us with one last really crucial question. In a market that's just full of headlines, posturing, and head fakes, maybe the most important skill is learning how to see past all that noise to find the real story.